Good morning, everyone. It's Tuesday morning here. Ben Buckner and Dan Bossi to go over the grain markets. As we look at overnight trade, we were seeing a little bit of bull spreading back in corn again. July corn gaining on December after yesterday's lashing, if you will. The wheat market also trying to bounce on news that the Chinese Henan, a key wheat province in China, is a little too dry, though some of the weather models do have some rain for that area. And then the soybean market falling on weakness in palm oil and then soybean oil. I think the budget from from President Trump last weekend is still weighing on the soybean oil market, with people now thinking that it may be a while till we get some kind of proposal from EPA in terms of RVO or other things going forward. Good morning, Ben. What do you got
still
today?
Kind of waiting on a lot of stuff. I think the trade deals, biofuel policy, weather, of course. And for now, we still kind of have, turnaround Tuesday, more or less, but also the hurdle of supply in the short term. I think that's still something we focused on pretty intensely the last week, but it's still important. And I think it's kind of glaring at us in the face here. I think a lot of people watching this have seen the 7 and 10-day forecasts in the US, and we kind of isolate the first half of May. It's almost ideal. So wheat increasingly has entered the heading phase in places like Kansas and Oklahoma and Texas, and they're going to get more rain. This follows crop condition improvement there. And then you can see it's rare for these maps to show completely white conditions for 7 days, really anywhere. But you see we've got almost complete dryness across the heart of the Midwest and the Central Plains. So again, what's left of the 25 corn and soybean crops, I think, will be planted in the next 2 weeks, more or less. So we're looking for pretty rapid progress. And that follows what we've been seeing all year. It's been aligned with longer term averages. Corn's 40% planted. That's a bit higher than normal and last year. And we think that the U.S. farmer is going to plant 20 or 25% of the crop in the next 5 or 6 days. So we're going to stay at above average, at above last year. I think this is important when we think longer term. This implies normal pollination dates. It's going to be the second half of July. We're also looking at normal harvest dates. So we're going to have replenishment, ceteris paribus, the first half of October, I think, in bulk. And then thinking about like the Dakotas, where you've got 39% of the South Dakota corn crop planted and 17% of the crop in North Dakota. Both of those are well above longer term averages. That's usually where prevent plant hits total corn plantings. And so I think we'll avoid that this year. So NASA's forecast in March is probably correct, or maybe a little bit too low given favorable weather. Soybeans similar. The crop was just about 30% planted as of Sunday, and probably we get another 15 or 20% of the soybean crop planted this week. And so again, just avoiding prevent plant, normal reproductive dates, and then normal harvest dates, because we do need more new crop supplies, but we are going to get that on time, I think. Lastly, sort of with respect to crop conditions, wheat continues to improve, and it's not surprising. The wheat crop has responded to some pretty solid rainfall totals almost across the entire winter wheat belt. 51% of the crop is rated good to excellent today. That is above last year and average, like everything else. We've got a hard red winter crop condition index at 321 points. That's up from 320 last week, and an average of 305. So I think when we put all this together, there's still a lot of weather to go, but a total U.S. winter wheat yield above 50 bushels an acre, probably pretty close to locked in. Last year it was just under 52, and probably something like a 42 bushel an acre hard red crop, which is a surprise given the weather we saw, just 30 days ago. But I think we've got pretty decent winter wheat yield potential just because of recent weather. I think the second part of this, and I think why corn has been kind of the bearish leader this week, is, of course, no major central U.S. weather threats. And then I think we do kind of eye competition for export demand after the next 30, 40 days. The Brazilian market's been trading, pretty normally from a seasonal perspective, but it is also extracting premium. We've seen crop estimates rise, not fall, in the last couple of weeks. Some are at or above 130 million tons. The Brazilian corn market has been dropping, so the July contract is now down to $4.90 a bushel. That contract peaked at about $5.50 just 3 weeks ago. So you can kind of see Brazil starting to get ready to have this exportable surplus that will find the world market pretty soon. Now, we have very little confidence in forecasts beyond 30 days, especially maybe even 2 weeks. But something we did just want to communicate was the consistency of these long range forecasts. So again, there's not going to be any threats to planting field work. But the May, June, July forecast have been pretty consistently dry. On the left, you see the CFS V2 model from the U.S. Weather Service, and on the right, we've got the European model. And so we will see if these are correct, but just do want to highlight there probably will be some weather volatility over the next 100 days. Temperatures are similar. So and again, just the consistent nature and the agreement of the models here, where we've got May, June, July temperatures from the CFS model on the left, the European model on the right. And so it does look warm, dry. We'll see if this plays out. We've got to get through probably to the early part of June before we start to worry about yield potential. But just wanted to mention that those things kind of linger in the background to us. So that just adds to macro concerns, trade policy, biofuel policy, and we do have to contend with weather, I think. So that is what I've got this morning, Dan.
Well, thank you, Ben. That's a thorough look at where we're at. I would agree on the supply pressure. Corn was the bull market. Now it's kind of turning out to the bear longer term. One thing that does have my attention, wheat is still what we call Fusarium or scab. In this kind of wet soils, and if we start to heat things up, it's going to be something that I believe could become an issue. So that is a big yield thief going forward. So before we lock in on yields on the United States, we need to get past the scab, if you will, forthcoming. That being said, I still think the forecasts look generally favorable as it sits today. So as we think about the markets today, look for a two-sided trade back and forth. I don't know, any closing comments, Ben, before we sign off here?
I think it makes sense. Yeah, we're still kind of in this mindset where we don't know much about the future, but it does look like there are some hurdles to cross. And so choppiness still, rallies probably struggle for another couple of weeks just as we're planting crops so rapidly.
Well, let's get behind the May crop report on Monday. I was encouraged by USDA Secretary Rollins indicating that the trade deals that she's seeing is very exciting. I can only imagine that hopefully means additionality for U.S. export demand. Ben Buckner and Dan Bosse here, wishing you a great Tuesday. We'll look for choppy markets here today, but overall, the economics of the U.S. Economy are looking better. Labor hiring is strong, and so that may forego, at least for now, having some kind of lasting recession. Have a good Tuesday, everybody.